Oh, relax. Was ready to go. All right. Let's get right into it. MNQH4. Okay. What's good, everybody? What's up? Two-step. Brian, we got everybody in the house. Walter, Shan, Josh. Man, of course, we have the Chart Addicts team. Bryce, T, Betham. We got Jacob Betham in the house. If you guys haven't checked out my podcast with Jacob Betham, go ahead and check that out after the stream. Not right now because class is in session. But after the stream is done, go ahead and check out the latest podcast we just dropped with me and Jacob. It's live on our channel. Welcome back, everybody. There's a lot of news we have to cover. I'm going to keep this short and sweet. Couple housekeeping things before we get started. Number one, if you guys took the masterclass at any point in the past, so if you guys were in the October, November, December, or February masterclasses, we're doing a review session on Wednesday. Okay, so you guys check your emails, make sure that you guys received the invite email to join that free webinar. We're going to be talking about basically how the strategy's been running in 2024, some key things to watch out for, as well as the fundamentals that I'm personally looking for. We'll be talking to you guys about some adjustments that might need to get made into the summer trading the strategy, and just make sure you guys are ready for 2024 to keep that momentum going. So make sure to check your emails for that. We've announced the first opening speaker of the FX Summit 2024 conference. Cats out of the bag. Peter Tuchman, Einstein of Wall Street, is going to be the opening speaker for this year's FX Summit 2024 conference. The FX Summit is the most anticipated conference of the year for traders primarily, but also folks who are interested in investing, crypto, and entrepreneurship. Make sure to grab your tickets while they're still discounted for early ticket pricing. Team, am I missing anything else? Oh, 88.6 boys and 88.6 girls merchandise is now available for pre-order. If you guys head over to the link that's in the description, relax. I think the link is in the description. I might be mistaken here. If the link's not in the description, we'll send it over. No, it is. Make sure to click that link in the description, ttrades.com. You guys will be able to grab your pre-orders for the 88.6 boys merchandise. Anything else I'm missing, team? Is there something I missed?
No.
Did all of the master classes. Walter, brother, I'm gonna rename the master class after you at this point. It's gonna be Walter 100. That's what it's gonna be. T, did I miss anything?
If you didn't get the email, just email me.
Okay.
And
Yep. Submit a request on Discord or just shoot an email to info@chartaddictsfx.com. Okay. Let's talk about the markets. A lot of interesting things that have happened since last week. I was traveling. We went up to New York. We had a private tour at the New York Stock Exchange. Me, Anthony, Jacob went up there to meet the opening speaker of the FX Summit. We got a private tour of the stock exchange. Incredible experience. We weren't allowed to live stream inside. I wanted to do the New York live stream from inside the New York Stock Exchange, but didn't get to make that happen. We'll come back and do it. All right, guaranteed. What else? That was interesting. And we'll be back in New York mid-March. We're still figuring out the final date. I think it's going to be the 15th or the 14th. So if you guys are interested in a live seminar, we're going to be doing one. Make sure to reach out to us if you're from New York. We'll have a wait list in the next 2 or 3 days. Keep an eye out for that on the live streams. Okay. So crypto, everyone knows Bitcoin's reached close to all-time highs. We might break all-time highs this week. And there's two camps. Some folks are thinking that the market is overpriced and that we're due for a correction. I'm kind of in that camp. And then there's another side that says because there's so much institutional demand for crypto and the supply keeps dwindling, less people are trading it on exchanges, so there's more holders. And we have the Bitcoin halving next month. So the supply of Bitcoin is going to get cut in half for every block mined. It'll become twice as expensive to mine Bitcoin from an energy usage perspective. So you have all of this institutional demand chasing Bitcoin, and then the supply is getting more and more limited. That's why there's a potential for this crypto bull run to continue. My personal strategy is that the main cap coins, those large caps, are overvalued. It's, from 70K Bitcoin up to 100K. Yeah, you might make 30% or whatever that percentage is. That's not going to be the returns you really think you're expecting to get out of crypto. The mid caps have already started moving. I'm really talking about the Solanas, the Cardanos, the XRPs, and the like. And then you have the more speculative kind of low cap coins. The small caps are the ones that I'm mostly focused on. That's where I believe the biggest return on investment is going to be. So from a 70K Bitcoin up to 140K, I could double my money. But if you can find, let's say, a small cap that's trading at under $1, let's say 30 cents, and it goes to $2, that's going to be about, God, a 10x return? No, not 10x. Oof. Why did I do this to myself? Let's say it's trading at 20 cents and it goes to $2, you'll have a 10x return. So the difference between doubling your money and then making 10x, huge difference. You either turn $1,000 to 2,000 or you turn 1,000 to 10,000. Big difference. So the majority of my focus right now is on small caps. Now I know what everybody's thinking. Roy, what small cap should I buy? Do you recommend any? Do you have any cryptos that you're watching? I'm not here to give specific crypto recommendations. The VIP chat, I'm going to give you guys my top 10 list for this year. But what I would tell you is from my experience, because this time could be different. We don't know. From my experience in 2017 and 2020, we don't get to choose which assets do well. You might do all the analysis in the world and find a great quality project with a solid community, solid technology, and solid network effect. So a lot of people adopting it. Doesn't mean it's going to be the highest performer. It really is random. Elon decides to take, not Shiba Inu, it decides to take Doge and put it on his back. You don't know that that's going to be the one. It was one of 100 cryptocurrency solutions. So don't try to be too smart and and try to find and pick the perfect investments. Instead, recognize that everybody's going to be FOMOing, and if Bitcoin's too expensive, typically the small caps get a lot of the attention. People feel like they missed out on Ethereum, they go and buy something that's a small cap. Make sense? Crypto is one of the few places that retail can get in before the institutions. So this is our imperative because it kind of seems like this is the last one, the last big crypto bull run,
You
at
got a
least,
sneezer?
until we break all-time highs. Okay, just to give you guys that visual here, we're almost back at the 69,000, almost 70,000 all-time highs. Once we reach these, I am expecting some selling pressure to set in. You guys have to realize that a lot of the early institutions that bought in, if we're going to talk about MicroStrategy and Tesla and some of the largest holders, they were buying here. And now that the price is pumping and JP Morgan and Fidelity and the large institutional investors are starting to pump price, as soon as it gets up into all-time high territory, some sell orders are going to trigger. They will be taking, the folks who got in down here will be taking some profit off the table. Or are they going to sell all their Bitcoin? Are they going to change their mind about Bitcoin? Not at all. But if you guys were holding $1 billion of Bitcoin at 25,000 and it goes up to almost 75,000, you've tripled your money from $1 billion to $3 billion. You might take 50 million, 100 million off the table. Maybe you might take 500 million off the table if you're a company and you put your company's assets there. So you have to expect that the largest holders sell at premiums and the smartest investors buy at discounts. And so we can expect a little bit of selling pressure here. I want to see it come down to about 50, like the 40 to 50 range. This black line represents the halving, which I don't know why it says June. I get the exact date. April 2024. I don't know why this was so pushed out. April. Hold on. Bitcoin halving counter. They have all these really cool counters online. They'll just kind of give you like a stop, like a clock. 17. That's what I thought. Okay, so this black line represents the next halving. In case you guys don't know what the halving is, we have a lot of great videos on our channel describing the kind of the foundation and basics of crypto. So we could push up a little bit more, and then I want to see the market kind of go sideways post halving. Usually about 140 days after the halving is when the next bull run really starts to take off. And so I think that that's going to, which is around the election this year in November. So I want to see the market go sideways for the majority of the year. Everyone's so excited about crypto, and then it's just going sideways. People just don't care as much. Spring break comes around, summer comes around. People are selling their crypto to fund vacations and everything else. You don't see as much demand there. And then, in the second half of the year, we start to see that demand pick up. That's the timeline I'm following. Could be very wrong. The market could continue to rip, but I'm not here to buy cryptocurrencies at a premium. I'm here to buy at a discount. Okay. Awesome. So 44 days away from the halving. This is exciting. Halving comes every 4 years. Kind of lines up with the election cycle, oddly enough. Okay, let's go to Forex Factory. Let's talk about some important things happening on the fundamental side. So I'm going to go to Forex Factory. I'm going to filter this out just to include the highest impact events. Remove all the currencies that I'm not trading. Actually, I have to keep the yen because there's something very monumental that could happen with the yen. As you guys know, I've been bearish on the yen specifically. I've been bullish on UJ and EJ and the rest on yen crosses, but I've been bearish on the yen because of the monetary policy they've set of overprinting their currency and then having low to negative real interest rates, basically paying people to take that money, has made the Japanese yen one of the least attractive currencies in the world. Now, folks will still pick it up, like other central banks will still trade it in order to maybe buy goods in that region that might be cheaper to buy in local currency, etc. But from a strategic standpoint, the yen is not the currency of choice for central banks looking for like a stable currency to hold. For the first time, they're talking about a policy shift, potential policy shift to start raising interest rates. This could completely flip their economy upside down or could save them from years of trouble, which they've kind of been having. Now, there's always rumors of rate hikes from the Bank of Japan, and they never happen. Okay. They're in a predicament. They had to choose between, I talk about this all the time, but they had to choose at one point between their bond market, which is basically how you fund your government. You just get people to loan you money, and then their currency, which is just the medium of exchange inside your country. And they sacrificed their currency by overprinting it in order to service the debt for the bonds that they had issued. People wanted their money back. They got to pay people back. You don't have the money because you don't make enough in taxes. You have to print it, which is exactly what they've been doing. Okay, so if they decide to shift that, there's going to be a crash on USD JPY like we've never seen before. There's going to be a crash on all the yen crosses like we've never seen before. That's one of those fundamental trades that happens every 2-3 years that I try to pay attention to. Rate hikes from the Fed and policy pivots from the Fed, that's what I watch. But for this is going to be a big, big impact for the yen if they go through with it. Right now, it's still a rumor. Okay. Good to have some backdrop on what's happening there. ISM manufacturing on Tuesday. We have non-farm. Well, this is the ADP non-farm payroll. ADP, again, is a private company that releases the employment numbers. Not that accurate. Actually, never been accurate. So, doesn't matter. Fed Powell is testifying at the House Financial Services Committee. Okay. Anything specifically that they're testifying about? They're just going to talk about monetary policy. This is all just a giant charade. But the thing is, they break you down in these hearings because you're there for 4, 5, 6 hours sometimes. And at some point, you just say something that can get clipped and taken out of context. And so you have to be perfect for 5, 6 hours. And most of the time, they're just asking Chair Powell about inflation and about other things that Congress really should be responsible for, like labor laws, taxes, prices at the grocery store, foreign policy, tariffs, trade wars, all the shit they're going to ask him about is the job of Congress to fix. And instead of like meeting with each other and actually solving problems, they're going to do this giant circus, fucking Barnum and Bailey circus, bring the Federal Reserve Chairman up there, grill him for questions of things that are not in his job description, but it's going to move the markets. We have JOLTS jobs openings, which is very, very interesting here. Okay, we went from 11.9 million jobs surplus in 2022 to now roughly under 9 million. So we're expecting 8.9 million in the forecast. If it comes out lower than expected, that's not good for the economy. If it comes out higher than expected, that's going to be a little bit better for the economy. This is a counterintuitive measure. Like at first glance, you'll be like, well, if more people have jobs and more people are taking up the jobs, doesn't that boost economic activity? The answer is yes. But you want to talk about slack in the economy. Slack is the concept of your maximum operating capacity, the most that you can do as an economy if everyone had a job, if everybody was spending, if everybody was, you know, willing and able to work and contributing to the economy. That's the full capacity. Slack is the difference between the full capacity and your actual capacity. So if we have, let's say, 9 million open jobs, we have about 4 million unemployed folks. There's a difference there from 4 to 9 of 5 million jobs that if we go into a recession, those jobs need to get occupied. There's some slack that can be picked up. And so it's not, it's not devastating to the economy. This number has been slowly getting smaller. Maybe it's because the open jobs that were being listed in 2022 are no longer available. But also, there's talks about how the migrant crisis has been affecting the number of open jobs because a lot of these maybe were industrial or agricultural jobs that have now been occupied. Okay, so we're going to be looking at those demographics or looking at those numbers and seeing how the demographics are shifting over time. For now, not too big of an impact. I think the Fed meeting is going to have the largest impact on the markets. And then I don't know how I missed this. The Bank of Japan's Governor Ueda is speaking on Monday at the Financial Summit 2024 in Tokyo. Okay. We'll keep an eye on that for all the yen pairs. Powell's testifying in front of the Senate, probably. Yep. So one day is the House, one day is the Senate. Same charade, different day. FOMC member Mester is speaking on Thursday. Due to speak at the Economic Outlook at the Virtual European Economics and Financial Center's Distinguished Speaker Series. Okay. Self-gratifying publicity stunt. Weekly employment. So we have it's the first Friday of the month, I believe, if not. Well, technically last Friday. Didn't NFP drop last Friday or am I wrong? No, it looks like they skipped it. Typically, it's supposed to be the first Friday of the month, but it looks like they skipped March 1st. So I guess NFP is this Friday. We are expecting a non-farm employment change of 190,000 last month, which is pretty weak compared to what we're looking for in a stable employment market, and looking at no change in the unemployment rate. So as you guys know, the 4 key measures I'm watching, or the 3 key measures I'm watching in terms of my gauge, my recession gauge, is going to be the labor market. So the unemployment rate, how many people of the total civilian non-institutional population who's able and willing to work has a job. I want to look at GDP, which is the total production in a country. So imports, exports, spending, taxes, everything in between. And I'm looking at consumer sentiment, consumer spending, and just the overall health of the household. If households are still spending, if the credit crisis has not reached its peak, then this, the show is going to continue for a long time. So no change to the unemployment rate is bullish for NASDAQ. That's how I look at things. Bullish for NASDAQ because the market is already pricing in kind of this stable labor market. Maybe we're not going to have 2.9% unemployment, but 3.7 is historical lows. And this is actually very impressive, that we're fighting inflation at the same time. We have low unemployment. Average hourly earnings, this is not good. You want wages to go up in line with inflation so that households aren't, kind of getting crushed with the rising costs. Okay, drop a like. If you guys are watching on YouTube, drop a like real quick if you've learned anything so far. Let's get into the technicals, and I'll show you guys the trades I'm watching for this week. Now, many of you have made the changeover from CFDs to futures. Congratulations. This is a new game. Well, it's the same game, but just a different platform, different console, I guess. The beauty of learning a systematic approach to trading is you can take this to whatever platform you're using. Now, some things might have to get adjusted when you look at fees, for example, when you look at contract sizing, when you look at overall conditions and fees on the platforms, you may have to adjust your execution or your trade management. but the strategy is the same. All right, so Apex, that's the one that a lot of folks had picked up a week ago or a few weeks ago, and I've heard just great things about Top Step and Apex so far. So futures definitely got a bright future, no pun intended. We looked at this trade last week on Thursday on the live streams, just to kind of recap some of the trades that were called on the live streams. First, gold at 1995. This was a trade called on February 14th. Geez, that was like 3 weeks ago. This was on the live streams, and we had been waiting for that 1995 area to get tapped for a long time. This hit during one of the live streams. It was when I sent out the markup, and then eventually price made its way up. It did take 3 weeks, but the market finally made it back up to the 2090 take profit. So congratulations, everybody who's been trading gold. What is this? This is WTI crude, so US oil. Price per barrel at the time, this was January 22nd. At the time, the price per barrel was 74. One of my, I'll say, predictions for the year that I wrote in the 2024 article, kind of like the 2024 outlook, is commodities having a great year, meaning gold, silver, copper, bronze, oil, just the commodities boom. And I think we've seen that if you guys look at number one, gold, and then also just the price of oil today. Now it's $79 a barrel. It doesn't seem like a big change, but everyone's going to start to feel this at the gas pumps. And then when price, or by the time that price gets up to $93 a barrel, this is where we start to reach $5 a gallon at the gas stations, and everyone will notice. Okay. So overall, great trade. If anybody was looking at oil, that was good. This is from last Thursday. This is the markup that we had last Thursday. I ended up sending this out on the live streams. Entry at 17,888, or sorry, 17,850. And the stop loss was at 17,780. So about 60 points of risk on this trade. The market played just below the 850. It kind of went from 800 to 850, wicked about 10 points above the stops, but eventually went up. Hit TP3, retested the previous highs, created new support, and then broke through. So that was another excellent trade. All right, let's take a look at where NASDAQ is now. So NASDAQ still kind of floating in its own area. A lot of people want to see a full retest. Okay, this is typically less common. Once the market really breaks out, you'll usually have a few runs before the market comes back to retest the zone. So for now, I'm kind of looking for a continuation of this momentum. Granted, it is a new month, so we might have a little bit of volatility this first week, and then things will even out. But as price forms the support, I think it's going to be one of these situations tomorrow. And obviously, we'll be live trading tomorrow morning, as we do every morning. And looking forward to seeing you guys there. Sideways movement over London and Tokyo session. Push up in the morning at market open, clear liquidity at the lows, and continuation. So do we make it all the way down 886 retest? Nope, probably not. The more aggressive the momentum, the shallower the retest. So we're probably just going to get dip below continuation, and then probably one or two more of these before we see a full release and a retest. Okay. Fundamentals still pointing bullish. The NVIDIA run is not over. There are a lot of stocks that are in trouble, that are in the S&P 500 and the NASDAQ, but the Magnificent Seven, those top 7 names, Facebook, Google, Amazon, Tesla, Microsoft, NVIDIA. I know I'm missing somebody, but you guys get the drill. Those folks are still doing good. Earnings season came out positive for most of the large cap names. So for now, bullish NASDAQ. That simple. Okay. Smaller time frame. I mean, you guys get the drill. I'll see you guys tomorrow morning, bright and early. Chart Addicts members, you guys know exactly what I'm watching here. Okay, push up, blah, continuation. It's that simple. Okay, we'll talk about this tomorrow morning. You guys know. You guys know what we're looking at here. Uh, Already went through Bitcoin. Let's talk about gold. Yeah, gold, beautiful. All the way from 1995 up to 2088. Now, I don't trade gold, but I did take a paper trade along with everyone just to kind of show how this trade would look. And the entry was all the way down here on the live streams, I believe, at 1992. So overall, perfect trade. Now, what do I see on gold? Now that we've reached these equal highs, I say we see a wick through tomorrow, a retest of this area here, a retest back inside, probably 50% of this previous candle. Anything lower, I'll start to kind of, I'll start to get a little skeptical about the buys. I'll start to maybe expect a move back down. But if it's anywhere in this 50% range, kind of halfway through this candle, back where these previous highs are, clears liquidity and then closes back above, this could become our buy entry tomorrow, 2066. And let me not just say tomorrow, at any point this week, if the market makes it to that range. Okay. So for now, market has finally reached this destination. When the market hits a target, give it a second to see if the market is going to liquidity grab and close back under, if the market is going to set a new high and then come back for a pullback, or if the market is just going to go in for the pullback right away. Once you hit your target, just wait. Whichever one the market does, look for a discount to continue trading with the trend. So wait for a pump, let the market pull back, and buy on the pullback along with the trend. Where's my final target for gold? To be honest, I want to see this wick get filled. It really just depends on how the dollar behaves this week. If we close under 2057, sellers are probably going to take this thing all the way back down to the bottom, like all the way back down to 1995. So if we break this candle, I'm expecting a push all the way to the downside. If we retest back inside this candle and we start to establish a new floor, this will be the new floor and we will fill this wick, which means 2150 is the final target here. Make sense? Any questions, comments, concerns? Again, I don't trade gold. Take that with a grain of salt. Just my 2 cents as an analyst. I did trade gold for 2 years, but then again, I don't trade gold now. All right, BTC, why a bullish year for commodities in your opinion? Tons of reasons. Really, it's supply chain issues with all the problems happening around the world, plus dollar value bullish. There's a lot of things. I'll be able to break it down in more detail, but right now, really, I was just seeing demand for commodities rising and supply chains getting more and more constricted. And we're going to talk about oil. You see the largest three producers are the US, Venezuela, well, the largest four: US, Venezuela, Saudi Arabia, Iran, Russia. These are all on that list. And Saudi Arabia is entrenched in a proxy battle with the Houthis. Russia is still entrenched in this sort of like midway peace negotiation with Ukraine. And then Iran is right in between the battle, kind of funding proxies in the Israel-Gaza conflict, as well as the Saudi and Houthi conflict. So all the largest oil producers kind of in some beef. It's really hard to move goods around the world with this much supply chain pressures, and hopefully things start to clear up and so gas prices come back down. But yeah, that's really what I'm looking at. Future's got a bright future, but I feel like the drawdown rules are trash. I agree. And I also feel like it depends on the firm that you're using. The only thing that I can tell folks is we have a strategy that allows us to take partial profits along the way. And if you haven't developed the ability to take money off the table while the trade is running, and if you've kind of developed your strategy to just sort of like let every trade play out, if it works, it works. If it doesn't, it doesn't. TP or die. If you're one of those folks, then yes, the prop firms are not for you. You can still trade futures on margin with 30-to-1 or 50-to-1 leverage, but just not a prop firm. And I get it, but like, what are we going to do? Am I going to go take this $150 or whatever it costs for the Apex challenge and go fund a $150 account? Or am I going to go for this and then just readjust my rules? Because it's really still about percentages of capital. Everyone's like, oh, well, you only have an X amount account. Look, if I make 1% on 150K, that's $1,500, right? That's what matters. And you're not going to do that with a $150 account. So for now, I still think prop firms are a cheat code, but expect those prices to get higher. I feel like futures is more for intraday traders that like quick moves. I agree. I mean, to be honest, NASDAQ isn't exactly like it's supposed to be just traded as an index. So really as an investment vehicle, ETF, or but derivative contracts like futures and options and swaps get built on top so that people can do intraday trading with high margin. And then there's us, which is CFDs. I'm just betting on prices. There's no futures contracts. I'm not entering contracts for the delivery of an asset at a future price or any of that. I'm just betting that price will go from here to here, regardless of how long it takes. Okay, you're going to charge me swap to hold my trade for 2 weeks until it plays out, fine. But at least I can hold it. So that's one of the benefits of CFDs is that there's no limit to how long you can hold the trades as long as you're willing to put up with the fees. Futures, not the same. Futures are a highly regulated market. They have an open and close time and high carrying costs. All right. Anyone have any questions? US30 played out to a T. This is a trade I sent out last week, I believe. That's NASDAQ. Where's US30? I don't know if I ever posted that US30 trade, but it is what it is. Okay. Any questions, comments, concerns? Ladies, gents, make sure to register. There's the Mindset Bootcamp on the 7th. If you're looking to get your mindset right, we're going to be talking about goal setting. We're going to talk about daily habits for successful trading and just for successful, whether it's entrepreneurship or taking care of your family. It does start with how much energy and vitality you have. If you don't know how to manage your energy, if your diet's off, sleep cycle's off, your habits are just kind of grinding you to a nub, you got to find a better system. We're going to be talking about that on the 7th of March. All right. Let me see what we got. FTUK is the only prop firm. There's the only Forex prop firm left. Now, there's a lot of them, just not servicing US clients. I didn't realize we have the same outlook on the pair. What's your insight on that? Robin says join the mastermind. Trust me, it's a win. But we can talk about that tomorrow, go into more detail. I'll have a full weekly schedule for you guys to follow along. Sunday market outlooks, daily live trading, and then of course, any of the webinars that we have during the week. Okay. Happy safe trading, everybody. Crush it. Regardless of the platform you're trading, the rules are the same. Don't overstay your welcome. Make sure that you have a plan and you're clear about your execution criteria. If you don't have a trade management plan, you're just gambling. So when are you planning on getting out of this trade? How much are you going to make when you get out of this trade? Make sure that you guys have your parameters down for your maximum risk, how much you're putting on the line, how much you're looking to make. That's how you manage your emotions. Trading psychology is not this if ephemeral thing that you can't reach. Most people don't have a clearly defined system. Yeah, I'd be anxious too if I didn't know what I was looking for. How are you going to know when it shows up? Not having a good trade management system that eliminates the frustration, making money, and then you give it back. You make money and you give it back. Or you just have a trade management system that lets you know exactly where to take profits. Okay. So having your systematic approach eliminates 99% of trading psychology. You don't need to be Gandhi to make money trading. You just need to get a clear plan going. Take it easy, everybody. Catch you live tomorrow morning for another trading stream. Peace. Okay. CA members,